Hi guys, today I'm going to show you how to build a property portfolio here in the UAE with just 500,000 dirhams or £100,000. I'm Hannah Pride and I've helped people make millions here in Dubai through acquiring and building portfolios, and today I'm going to show you. Now, the first thing we need to outline when investing or building portfolios is your timeline. With this investment, we have identified a 2-year hold. However, we could also hold it for 5 years. I'll do a breakdown of both, but for 2 years, how I would identify projects on a 2-year hold is where they are on the Emaar stairs. At the top of the Emaar stairs, you have the likes of Downtown, Marina, and at the bottom of the stairs, you have the likes of Jebel Ali, along with Oasis, or any new and up and coming development which is still in the desert phase. Now, a lot of people don't understand the timelines for developments or communities to get from the bottom to the top. A great example of this, if we look at the middle of the stairs, is Dubai Harbour or Dubai Hills. Dubai Hills, Dubai Harbour, Emaar Beachfront, whatever you want to call it, was launched back in 2016. It is now 2026 and they are still in the middle of the stairs. The timeline between the bottom to the top of the stairs is on average 20 years, and from the top to this side is around 10 years. Why? As I stated to you before, when you're buying at the bottom of the stairs, we're buying in communities which is just desert. Great example is Emaar South. You go there, you can see a lot of desert dunes. There's not much community vibe or anything. However, if we go to the likes of Downtown, we know the people that live here. We know what the amenities are. We know what Dubai Mall looks like. We know every single thing about Downtown because it's been there, it's established, just like the Palm Jumeirah. If you were telling me, or if we were building a portfolio saying, I want a low risk, low budget, maybe an outlook of between 2 to 5 years, we would want to buy communities within this area. When we're investing at the bottom of the stairs, you have to be prepared to hold 4 years before seeing appreciation. It doesn't matter if you're buying at the cheapest price per square foot. Where the market is at now, phase 1 investors still have to hold their property until at least 1 year before handover. A great example is Emaar Oasis. Early investors bought in at 8 million dirhams. The property is now 1 year off handover and we're just now only selling properties at a 70% return on equity, which is fantastic. However, if you bought a Mirage, which is phase 2 and handovers in 2028, we are still seeing deals at OP level. That is because it's still too far out for people to think it is worthwhile paying the premium, and they are not able to get mortgage abilities to pay that premium. That is something that's key to understand when building any portfolio. Now, as I said, we're looking at a 2-year flip or 2-year hold, maybe up to 5 years. We want something conservative that we already understand. My key areas for looking at a 500k budget would be the likes of Motor City, Arjan, JLT, anywhere that we already understand the community, however, is not right at the top. Why they're not at the top? Take Motor City, for example. We're still expecting a subway. We're still expecting new commercial. There is still plots. Everything already has to be there, and there has to be limited plots. And to work your way up from the bottom, this is simple, like building infrastructure, building malls, building subways, hospitals, schools. Middle of the thing, we already know what's there. It's the remaining last creeps up of appreciation. But as I said, with your investment, I've got some great opportunities in Motor City, so let's break it down further. For the 500k budget, we are going to be breaking it into off-plan and ready. We can break this down into 2 years and I'd be looking to achieve a minimum of 19% per annum, or 5 years, we'd be looking at 11% per annum because we're holding it for further. With off-plan, as I said, I'd be looking at a studio in Motor City at 800k. We can buy this in on a 50/50 payment plan with a handover of 2028. The key point when looking at off-plan is always the price per square foot, because that not only outlines if you're overpaying, but also identifies where your property is going to reach by the time of handover. Now, the average price per square foot in a ready old building Motor City is 1,850. A new building from the likes of all the new developers in Motor City is around 2,000 to 2,100. With this developer, we are buying in at 1,750 a square foot. Now, to be conservative, I would say this is going to reach 1,950 on handover, so we know we've got a 200 dirham uplift over the next 2 years on a 570 square foot apartment. This property, as I said, is on a 50/50 payment plan with installments of 10%. This means you'll be paying 40k every quarter, which works out at 160k per year, equaling £32,000. With off-plan, the only additional fee you pay is a 4% DLD, which would equate to 32k dirhams, £8,000. That means in your first year of buying this investment in Motor City, you would be putting down 192k or £40,000 sterling. Now, I believe Motor City is a very strategic play because in the next 2 years, we have 4 commercial buildings, a subway station. Motor City is one of the oldest communities in Dubai, and it's very like a UK city centre. It's not as grand as the Mall of Dubai. However, they have many shops, convenience stores, a Waitrose, a Brands for Less, etc., which understands the type of people that live there, and it's the only community outside a map of villa communities. So there's a lot of high demand here for school teachers because there's 11 schools within a 5-kilometre radius. Nannies, grandparents, people that work that have just moved over here that want to be close to their work, so you've got the opportunity for Airbnb, and to someone that is a new tenant in Dubai. It's a great opportunity for any investor. Now, as I said, we've invested £40,000 into option 1, and we still have an additional of £60,000 to invest into your next property and continue to build the portfolio. I would then split this into a ready property. We can acquire a ready unit in Motor City, a 1-bed or a studio, for around 1 million dirhams, so 200k. This would require you to put down 20% along with 7% transfer fees. This would mean your first payment would be 200k, £40,000, and the remaining 70k, £13,000 for transfer fees. These transfer fees are split into 4% DLD, which is basically stamp duty, 2% agency fees, and 1% approximately for your legal fees, NOC, etc., when it comes to transferring your property. On this type of property, we would then mortgage the remaining 80%. That would be on a 3.75% interest rate, which would mean your mortgage payments per year are 49,000 dirhams. The service fees for this type of apartment per year would be around 12 dirhams on around 500 square foot, which would mean it would be 7,000 dirhams per year. Now, as I said, Motor City itself already has a huge demand for people wanting to live in it. And for this size a property, a 1-bed, you'd be looking at around 77k per year to rent. This means this ready property would generate you a 7% yield, which would give you 19,366 profit, which equates to around £4,311 per year after all your fees are paid. This means you've invested into your second property, which is a cash generating property. And it then brings us into year 2. On year 2, you would then be required to pay the remaining 25% of your first property, which is off plan. In year 1, your ready property generated you £4,000, 19,000 dirhams profit, meaning you have £6,000 remaining from the £94,000 spent so far and £4,000 approximately from the rent. This means you have 50,000 dirhams to pay towards this property, and that means you have an outstanding balance of 150,000 dirhams, around £30,000. With this £10,000, you have put enough equity into this property to resell it before handover. The 30% has been paid and we can now offset it. What I would say is if you can save up and pay the additional £30,000 or 150,000 dirhams towards this property, I would. This means you're going to get the highest capital appreciation if resold, and it would be even passing 2,000 a square foot, because we know the quality of this developer and people's emotions play when they can touch, feel, know where their friend lives, know where they're working, and go into an apartment. But if we're just to resell it at the market below the new launch rates and just above Motor City, we'd be looking at making 119k profit, reselling at 1,950 a square foot. So in 2 years, if you decided I can't pay the additional £30,000, we would resell and we'd make 19% in those 2 years profit return, which would be around 113k, which would be around £23,000 on reselling the property and your £4,000 rental yield. This is how I would strategically build portfolios in Dubai, and I would continue invest into your pot, so into your investment pot per year, at least £30,000 to £50,000, so you continue to buy, remortgage, get a rental yield. The more you can do this, the larger your portfolio comes, and let's say you can build 8 portfolios over the next 10 years, you could be making yourself a salary of at least £2,000 a month. If you want to learn more about how to build portfolios in Dubai, or have more breakdowns of this, or if you have a number that you want to say, I have got £1 million, show me how to make a portfolio, drop me a message and I'll be happy to do a breakdown. Thanks for watching.